In this video, I will share a strategy about how to buy the dip. You must have heard a lot about it before, but how exactly should you do it to save costs and reduce risk when you buy the dip? Let me give you an example and show you how to do it. So this strategy is to use a large interval to roughly identify the market entry point and then use a small interval to find the exact risk reduce point to place order. Let's take a look at the Bitcoin price. As you can see, there are a recent price dip after the approval of multiple Bitcoin ETFs. So basically, it's in this period of time. You can find the price trend bullish again until right now. So how do you identify the good entry point to buy the dip? You can actually depend on two indicators, which are RSI or short-term EMA or MAs, such as EMA7 or MA7. So for RSI, you can wait for the RSI to dip below a small threshold value and reverse. So for example, in this one here, it's basically this point. You wait for the RSI to dip to a small value and then reverse. So basically, if you're depending on RSI, it's going to be this point in here. So if you are going to use EMA or MA, you can use a short-term EMA or MA, basically EMA7 or MA7. For example, this is MA7. So you can wait for the price to reverse and go above the EMA7, which is this point. So basically, you have two good entry point depending on RSI or EMA is here or here. So as you can see, typically RSI response is faster than EMA. So using RSI will have better price but more risk. And using EMA7 is less risky but with a higher cost. After you decide to enter the market, you can go to a small interval like 1 hour interval, wait for the next MACD crossover. This way you can reduce your risk further. Suppose we are using the RSI, basically it's like January 22nd to enter the market. Then we can go to the 1 hour interval chart. So let's go to January 22nd. So it's not this point. It's mostly like this point. So at this point, you decide to enter the market. But there is a possibility the price is going to dip further. We are going to use the MACD crossover to monitor the MACD crossover point, such as this point and this point and this point, sometime in here. So during the monitor of the MACD, you get to wait a little bit to wait for the bottom to form a resistance and a support region. For this case, you get to wait to this period of time to say there is a support in here, and there is some resistance in here, and there is some resistance in here, resistance in here. So you get to wait for a little bit further for the MACD crossover, and also the price goes above the resistance of this bottom. Basically, you can place a order at this point. So this entry in this point is like a risk reduced and also with a good price. So let's go to our site TTM to show you how to use our tools to help you easily achieve this. So as you can see on our side, we have if you use EMA, let's just say if you use EMA, then we will send you alerts at this point, and you can decide if it is a good entry point or not. If you decide this is a good entry point, then you can use monitoring for order panel and go to a small interval, 1 hour interval here, and select the MACD crossover strategy to monitor the 1 hour interval price chart. So you'll receive these green dots, and once you are certain like this MACD crossover point is above the previous bottom region, then it's a good point to enter the market. So this strategy can prevent you too earlier with high cost and risk further price decline. So for example, in a price chart here, if you enter the market in here, you are doing it with like a high cost, and it's also very risky because the price is highly likely to decline. The RSI is very, very big, and this you didn't cross the EMA 7, so it's very risky and also high cost. And also at this point, we are not certain if the price is going to dip further or it's going to reverse. But because the RSI value is relatively lower and it's going to reverse, and also we monitor the 1 hour interval price chart of this region to make sure the price does not go lower further. So with the combination of a long and a short interval price chart and a few indicators such as the EMA, RSI, and MACD, you can buy the dip with adjusted risk and cost. Keep in mind, this strategy will have better performance in the bull market. So I believe we are in an initial stage of a bull market. So I believe this strategy will be very useful if you want to buy the dip.